Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, April the 28th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart, we have high-level overview, wave 1 done, working on wave 2 down. When this is finally over, the expectation is for the dollar to rip higher, go breaking out above this high, heading toward that 130 to 140 target. That is the plan. The question is, has this bottomed or we still need more downside? Well, up and until price proves otherwise, we cannot say this is a bottom just yet. And to make things even more a little muck and mire here, we got a little 618 retracement stop and a 618 down stop. So we'll jump into the charting platform and show you what I'm talking about. From the prior low, which was our potential bottom reversal, this low up to the current high, we're kind of holding the 618, which is this green box. From that prior high to this low, we're holding the 618 box up here. So we're stuck between support and resistance. Last week, as my daily started to reverse, we talked about we expected the dollar was going to rally toward the magic fibbo and then reverse. Well, we rallied toward the magic fibbo, we reversed, and not exactly sure what that is, this big tick here, but it tried to go up and it was rejected and it came back down. But before we used to talk about what? Compress and compact the channels. Well, from this low to that high, we have the channel of this support zone and this resistance zone. Then from this recent high to low, we got a 618 back in that same zone. So that's the resistance. And then on the most recent move, this low up to this, whatever that is, bad tick, or if that was included, didn't really see that movement on like the euro dollar, which is the inverse of this. It just kind of didn't do much. But this big move up and this push back down, guess where we're holding? 618. So you can't make this stuff up. So again, we got the low, the high, holding the 618 to the downside. We got the high to the low, holding the 618 to the upside. In this most recent move from the low to this new high, we're holding the 618. So we're still got lower highs going. That's bearish. We got higher lows going. That's potentially bullish. So we're just kind of stuck in the middle up and until price proves otherwise. We are below the magic fibbo. So if we can start getting above this 99-ish area, especially this 99.50 where that 618 starts off of the big move, this high to the low, we start getting above that, pushing above this basically 100 level, then it kind of sets the tone we're going higher. To the downside, if we start closing below this 98.30 to 98 zone, you see 98.77, 98.26, we start closing below that, it sets the tone we're going lower low, which would put us right in the middle of our 618, 786 retracement off of this low to the high. So even though we do break below this 98.30/98 level, Yes, that would give us a high probability we go and visit 97.30, 97.15, which would be a swing point low off of this, right? We'd go lower low, but we're still stuck in the bigger picture 618 retracement zone. So I've been saying this for weeks now. Up and until we take out this green box, we do that, we're going lower low. Lower low than what? This low in the 95 would put us in the upper 94s, maybe mid 94s, or even 93s area. So this is kind of where I think we're headed, but price has to prove it. Just remember, at some point, that wave two, that's why I keep showing this big picture, at some point, this wave two is going to end. Does it end here? And we're already working on climbing out of this? Or do we go lower low and continue this retracement? So I still say we're going to reverse somewhere between this low and our potential target we talked about it 4 years ago low. Somewhere in this area is where we're expecting the dollar to reverse and go breaking out. So at this juncture, it's too early to call because we have major resistance above we got to take out, and we have major support below we got to take out to tell us which way we're going. So we're stuck, right? There's 50-50 chance we can break out and go a little higher high, or we could break down, go lower low, and we're stuck between the 618 off of both of those moves. So when that happens, this is typically the time you don't really trade it. If you're in a position already and you're up, be in a position of authority, because this has no direction right now, even though I still think we're probably going lower low more from prior price action than we are going higher, but it still throws out that wave two will end. Even if we keep saying it's going lower low, at some point this wave two will end and we do go breaking out. All right. So back to the main levels to watch. This resistance box up here, this support box down here. If we break above this resistance box, we're going higher high. If we can hit 102, we're going to hit the short squeeze. In my humble opinion, that'll thrust us up toward that 105 to 107 level. And that 105 to 107 level is where the rubber meets the road. That will dictate we get above this big pink box. That's why it's so large and extensive, because we get above that, then it's pretty highest probability this is now over and we're going higher high, right? But even if we get above this one, means we're going to go above this swing point. And if we can hit 102, that's where the short squeeze will kick in, and that'll thrust us into this area. But there's no rule to say that if we reach this, we're definitely going through it. After all, go out to a higher time frame like the weekly chart, and all this big box is at this point is from this prior swing point high back in January 25, all the way to swing point low into January 26, kind of 1 year on that. Do we break above this 618786 to go a higher high? Or do we just retrace to this point and still fail to go lower low? So this is why it's a tough decision to call this and say, yep, this is definitely the end and we're breaking out. I do know that is a fact that at some point, that wave two, whether it is turns out to be here or it's lower, we're still going to go breaking out. So big picture. I'll even go to the monthly view. We see we have our target up here. At 130 to 140 is where I definitely think we're headed. But we certainly could go lower first before getting there. So big picture, all roads lead to us going up toward that 130, 140. Whether we go lower or low, we get up there. We just chop and grind, we go up there. Doesn't really matter. We're going up here, and it's probably going to take years. Just like this point when I said the dollar is due for a multi-year, lovely, beautiful correction before we can go even higher. This was expected to be a correction It was never expected to be a reversal to go lower low. It was always expected to be a correction to make a higher low, higher high. And that still stands. But as you drill down, so this is the big picture. What's the likelihood we go up here? In my humble opinion, extremely high probability. Now, as you zoom down, is it the fact that we're already bottomed and we're slowly but working our way to eventually take this out to set the tone? We're going higher high? Or is this part of this climb and grind we've been looking at for years now? We got a low, is that it? Nope, didn't think so. We got this lower low, looked at price action, beautiful three-wave correction. The proportions were perfect for consider a lower low. We got another lower low. Then when we were here back in September of 25, we got this overlapping, chopping, grinding, grunting, laboring type of move. Still didn't look right. We did get a 618 off of that, and then we bounced to a 618 to the upside that failed. So we got stuck between the parameters again. It ultimately went lower low. That kind of set the tone over here by overlapping. That's traditionally not the look you get for a reversal. This one is a little bit different. We initially moved up, we subdivided. So if this was the 1, 2, 3, 4, 5, and we were looking for a correction, we talked about this moving down, and this was not likely finished. Then we drilled down even deeper, so I'll zoom this way in, and this is where I came into last week. And I said during this move, because of this decline, we had a high, we had a low, we had that 618, 786 retracement that failed. This move down looked like a 1, 2, 3 because of what? It went too far. So you do a three-wave tool. That's this tool right here, 3-point tool, which is the trend-based fib extension is what they call it, Fibonacci extension. So it's the high to the low, lower high. If this was going to be a little three-wave correction, you typically would stop somewhere between equality where A equals C, or there's A times 1272 equals C. Well, this baby blew past all of that, even went beyond the 1618. That typically is a sign that we have wave 1, 2, 3, 4, and I looked for this to stay below, even with this weird tick. Again, I was saying that earlier. This is a weird tick on the dollar index because we didn't see this big of a move on the euro dollar, which is inverse relationship. So whenever the dollar moves big up, the euro should move big down. Or when the dollar moves big down, the dollar index that is, the euro dollar should move big up, inverse, right? So we didn't see that on the euro dollar chart, but this is still below that initial move down. So this still looks like the 1, 2, 3, 4, and we're pushing lower in that 5. Well, is that in this right here warranting the breakout? Maybe, but we're still stuck between support and resistance. And last week during this rally, I said we'd probably look for this to go test the magic fibbo, then reverse. That's basically what we got, minus this little weird tick, which didn't last long, but that's basically what we have so far. And notice even on this little rally up today, where are we stopping? The magic fibbo. This is part of the MPA PE5 version 5.0 software. It is critical support and resistance. And when it's below, it's tough and it acts as resistance. When it's above, it acts as support, right? Comes down, acts as support. Finally break below, it acts as resistance. So that's why it's important to have. In the interim, we got a coin toss. Get out your coin and flip it. Are we going to break out or are we going to break down? We could just go sideways for a while. There's no rule. We have to go break out or we have to go break down. We just kind of chop and grind like we've been doing for the last week or so. We're stuck between resistance in this pink box, support in the green box, and we're stuck, right? Big time stuck right now. So as long as we're below the magic fibbo, that's more bearish. The fact that this looks like a 1, 2, 3, 4 working on wave 5 down looks more bearish, right? So as long as we stay below this pink box, and more importantly, that recent swing point, because it's right at the wave 1 bottom, right? If that's, let me do the marker and I clean that up and do a marker. But if this initial move down is wave 1, that initial move up is wave 2. This, again, wave 3 went far enough. It reached the 1618 and further, which is typical of a wave 3, not an A, B, C, right? So then we said, well, as long as we stay below this swing point, which is right there, which we're right at it and below it, that's fine. That's part of the rule. Wave 4 correction cannot go into the area of your wave 1. So this is still an impulsive move, which this should be based on the parameters. So far it's holding. And again, that looks like a bad tick because it didn't show up anywhere else. But hey, it is what it is. And it's still below where it needed to be. So that's fine. So theoretically, we still need another flush lower. Even if that is going to be the A, B, C bigger picture, and this is ending, this is the 1, 2, 3, 4, 5. So we still need another flush to a lower low to set that up, which again, notice where it sets up. By getting the push lower, look where my 1448 is, right in my green box. My 1272 in my green box. My 1618 in the green box. So this could thrust us down into this and still bounce and go breaking out. So it doesn't mean if we get this lower low of this low, we're definitely breaking to a new low below that low. That's why this green box is critical. In order for us to say we're going lower low, which I still think we are, up until price proves otherwise, we got to get below this. Amen? We get below that, we're definitely going lower low. So far, so good. Now to the upside. If we can initiate not only getting above the magic fibbo that's sitting right there, but if we can close above this little swing point, still got major resistance a little bit higher up to 100. See my 100 right there? That's still major resistance. So if we see it close above this, then I think it's definitely going to go test that 100. If we close above 100, it sets the tone we're going higher high than this previous swing point. What it doesn't tell us, meaning we're going higher high, does that mean that this is over and that's the end of the show? No, we could easily go higher high, start reaching to this 101, 101 and change, come approach 102, fail, don't close above to hit the short squeeze, but fail at that point and still go lower low. Well, I'm really going to throw it out there because even if we hit 102 and go short squeezing all the way to 105, 107, this is the critical of all critical levels right now. This is most important. That's why it is so big and obnoxious on this chart to call your attention to it. We have to get above this guy to set the tone that this would be the end of that move. And that's the wave 2 that we show on this chart. That would be the end of this wave 2, and it's over, and we're going breaking out. So in order for us to say that with a high degree of certainty, we got to get above this guy. In the interim, you can see why it's a coin toss. I still think based on the recent price action, 1, 2, 3, 4, 5, we need a lower low here, but it sets up right into the support zone of the prior low up to the high, which doesn't dictate we're going lower low yet. We got to get below that. So just a quick summary. We get below this green box, we close with a daily candle below that. We're definitely going lower low, which is below this swing point into the target zone, lower low. If we close above this little swing point here, doesn't mean we're definitely breaking out, but it means we're going to go test that 100 level. We close above 100, which would take us out of this pink box. with a daily candle body, not a wick, but the body close, then it sets the tone. We are going higher than this, and we got extensions up moving toward that 102. So you can separate this into pieces and parts, Ron Popeil slice and dice scenario. We close above 102. We're definitely going higher, in my humble opinion. You know, the short squeeze and push toward that 105, 107. We close below this green box. We're definitely going lower low. We're stuck between support and resistance where we've been for the last week plus. And even on the most recent bounce from that low up to that high, guess where this correction stopped at the moment? At the 618. So we got it over here. We got the bigger low here to the high. We're above the 618. We got the high to the low. We're below the 618. And the most recent move, low to high, we're above the 618. And if you want to keep this going, if that's not enough lines on your chart, run another one of these from this recent high here down to that low right there. We're below the 618. That's why these are so important. Every time price moves, it moves in sync with these levels. It's interesting. So big move, low to high, got the support of 618. Recent high to low, we got the resistance of the 618. Recent low to this high, we got the support of the 618. Recent high to this low, we got the resistance of the 618. So we're overlapping. So this is why we're going sideways. It's chop zone. And if you look at price action minus all of that, this does look like the 1, 2, 3, 4. We still need to push lower in 5. So even after all that being said, that we're stuck between support and resistance, still think we got a higher probability we're going lower low because this does not look complete in a 3-wave correction. It went too far. This looks like the 4, and we still need the 5 to finish that out. Once we get down here, if that thrust closes below the green box, then in my humble opinion, we're definitely going lower low than the low back here in February. Amen? All righty. So be careful. If you're trading this during this chop zone, just be aggressively taking profits. Again, the bias is more likely going lower low because this little 1, 2, 3, 4 does not look finished to go breaking out. It looks like it needs to go lower low. Once we get down here, again, if we close below the green box, my humble opinion says we're going lower low than that low. If we break above the pink box, my humble opinion says we're going higher high than that high. And then we run into the potential short squeeze. You can set an alert today, tomorrow, next week, next month, whenever it triggers. We close above 102 with a candle body, not a wick. Expect this thing to go popping toward that 105 to 107, 108 zone right up in here. So big picture. What happens if we hit this? We can still go lower low. We clear this, we're going upwards for weeks, months, and even years, headed toward that 130, 140. So I'm going to zoom back out. The biggest picture with all these lines is, here's your target. This is where we're going, my friends. The journey, all roads lead up to this guy at 130, 140. The question is, on the short term, do we need to go lower low first before we go up there? I don't care if we go lower low first, we're still going up here. Or we break out now, we're going up here. Or we go sideways, then break lower, then go higher, we're going up here. Or we go sideways and we break out, we're going up there. Every possibility, in my humble opinion, says this is where we're headed. But I don't think this is the low just yet. We got to go lower low first, then potentially we're going to go there, right? So this is where we're definitely headed. How do we get there? Turn by turn GPS coordinates. And right now, more so leans to lower low than ripping up now. And what do we mean by lower low? Zoom back in so you can see what we're talking about. Then this prior low here at 95. That's why if we close below this green box, it's over. We're going lower low. All right? All righty. Now, what does that extrapolate when you look at this? And why am I still thinking there's a chance we go lower low? Well, that bigger picture, when we had this COVID low over here, got to zoom this back out so you can see all that. When we had this lower low during COVID, and we went up to this high we were talking about for that reversal. When we reached that 114 and change, we said we're going to have a multi-year corrective move lower before then we go up to that 130, 140 target. Well, this low up to that high, the rule says you close below the 618 level with a daily, weekly, monthly, etc. candle body, gives you a 75% chance you're going lower low. That's still lingering on this chart because we clearly closed below that level. And you can see right now where we are, we're still below that 98, 97, which was a 618 off of that COVID low up to the high. So there's still a 75% chance we go lower low. Well, this is lower low off of that low, but it's still lingering in the background, 75% chance we go and visit 85. And this is in the neighborhood of where we talked about 4+ years ago that we would go to. When this dollar finished its move, we said we're likely going to get a deeper retracement. What is this retracement? It's a 618, 786 retracement off of the bigger move, which is way down here. This is what this represents here that we've always been showing you. That's this low over here. This is the COVID low over here. This is that low. So I just knew based on price action, we're going to get a 618, 786 type of retracement out of this. The question is it off of this low or is it off of this low, which we're currently in a 618, 786 zone? So Mr. Tucson and others, if I move this up here to that COVID low area, we're right in the midst of the 618, 786 zone. Exactly. Well, if we get to my destination where we had talked about 4 years ago, and we're using this swing point low down there, then guess where the 618, 786 is? Between 87 and 80. And notice how on this chart right here, where is that level? 85, 82 is between 87 and 80, right? So from the COVID low up to the high, we broke the 618, which says we got a 75% chance we're going down here. So up and until price proves otherwise, this is still a likely target. In the short term, we're stuck between support and resistance. Yes, we could go breaking out because even if, what if, William Bruce? We actually get the lower low, we start over, we continue to lower highs, lower lows, and we ultimately get to these targets. Then we go reversing then at 130, 140. All roads lead there. Whether we get a slight lower low here and stay above the COVID swing point, and this ends up at a higher low, 618, 786 retracement, and then we go breaking out, or we go and figure this out where because of that low to that high, took the 618, we do push down toward this 85, 82, right? Then that sets the tone. We're still going up to 130, 140, or the lowest probability, we're already bottomed and we're going to eventually go breaking out, but all roads lead to that 130, 140. And because of this bigger picture, I expected a deeper retracement off of this low over here back in 2008, 2009. Low over here, I guess it was 2008. And then we looked at this COVID low. I still think we're going lower low, right? Still think it because we did break the 618. We have not taken out the 786, but that's what I called for. Some sort of 618, 786 retracement reversal. So we'll see what ends up winning. Is this COVID low over here, pivot going to be the one that does it? Or is it going to be this one back here in 2008? Which one is it? We shall see. But in the short term, just reiterating, zoom all that in. You can't see a thing but a million lines and colored lines and boxes, etc. But as you zoom in, is this low over? Possibly, but it's still a lower probability. We're still below the magic fibbo, lower probability that we're breaking out. We're below the resistance box. We're above the support box. So this is why this baby could chop. There's no rule saying it has to break down or break up and out or down and lower. We could go sideways for a while and just ping pong in here. But then you throw all that together and say, based on that 1, 2, 3, 4, still looks like we're going lower low. The bigger move lower to high, we take this green box out, we're going to go lower low than this guy. And when you go even further out to that COVID low down over here, we took the 618 out, which says we're probably going lower low. A higher percentage of 75% is greater than we're going breaking out right now. But just remember, based on this tool and looking at this chart, this is going to end 100%. We're going breaking out higher high, in my humble opinion, toward that 130, 140. I'm just not convinced that this is the end of this move and we start breaking out now. We're probably going to go lower low somewhere between the current low now and our original low of the target of my 618786 zone. Somewhere between this low and this low is where we're going to reverse from to go breaking out towards 130, 140. All right. All right, let's continue. So what does that mean? Why do we look at the dollar? Because we know where a lot of asset classes are headed when we know where the dollar's headed. First up, euro dollar. It too has some of the same parameters. I still think we got a likelihood to go breaking higher high than we do get rejected to go lower low. The same big picture. Well, this one's even more compelling because from this recent high here back in 21 down to the 22 low, we took out the 618. They gave us 75% chance we're going to 127.45. 70 plus, we're going to 130.99, basically 131. And then we not only, eventually as we were coming down, we tested it, failed, grinded it a while. Finally, way over here, as I start zooming in, we finally got a candle body, and this is on a weekly chart. So there's the candle body that closed above the 618. So that candle body right then and there, which occurred back in April, looks like April 7th of 25. On April 7th, about a little over a year ago, we closed above, stating we were likely going to go visit 127.50, 131, 130, 131 area. And then later, we got candle body closes above the 786, which reconfirms this is a high probability target. So this is why I'm still leaning toward higher high on the euro, leaning toward lower low on the dollar index until price proves otherwise. Notice this big green box. It's very important for the euro. Look how it's been reacting when it gets in this zone. On the way down, it acts as support. Then on the way up, it acts as resistance as it starts breaking back down. We break back up, support, 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 even in this zone. And then we took back down. It acted for resistance for quite some time before we broke back up. So this is critical that eventually I still think we're likely going higher high before we go lower low. But that's part of the plan. If the dollar ends up going to that 130, 140, guess where the euro dollar is going? Down here to 0.8, 0.7-ish kind of area. Well below parity of this 0.95, lower low. But if the dollar still has to go lower first before breaking out, then this euro has to go higher before reversing to go lower low. Got it? All right. So notice what I was talking about with that dollar index. Had a big wacky candle. Now go back to the dollar. And that's why I was saying let me go to the daily where you can really see the candle here. And I'll go back to my dollar index. This weird candle, yesterday's candle, look at the size of this thing. Massive. See it? Now, typically, when the dollar goes up, the euro goes down. And when the dollar goes down, the euro goes up. Inverse relationship. Why is that? The dollar index is made up of a basket of currencies, and the most predominant currency in that basket is the euro dollar. So therefore, it is perfect inverse relationship. That's what it does. But notice this weird candle on the dollar index. When you come down here to the euro dollar, we don't see that. Like a doji. Nothing like we're seeing on the dollar index, right? So that's why I don't know if it's a bad tick or what exactly it was. Kind of weird. But notice the same thing here. Why do we think we're going higher? Well, the reason we think we're going higher is this weekly chart. We have this prior swing point high, which we were talking about, basically December 20 and going into January, December, down to 22. We took the 618 out over here. We took the 786, which says we got an extremely high probability we're still headed higher. Well, in order to get here, we got to go higher than this swing point. And the closer we get to higher highs, the closer we get to that target. So this still is viable. And this downside is certainly high probability eventually. So we're definitely headed down here, in my humble opinion, because we're definitely going at 130, 140 on the dollar index. This means we'd go down this 0.8, 0.7-ish range on the euro. But all roads, whether we're breaking down from where we are, we're going there, or we go up to where we think we're going first, we're going down there. All roads lead to this lower low, just like all roads lead to that dollar index going up to that 130, 140. So far, so good. Inverse. So as we zoom in, we look at the current price action. In the euro, because the dollar index is stuck, the euro dollar is stuck too. We had the initial move down, retrace. We stopped at the 618. So we're between resistance. Then from this original low to high, we stopped at the 618. We didn't test it too strong. It didn't even reach the magic fibbo, but we're above support. So just like the dollar index is stuck between support and resistance, the euro is stuck between support and resistance. The bias is the dollar is going to break down. The bias is the euro is going to go breaking out. So first things first, we clear this pink box to the upside. We're going higher high. The higher we get to the 120s, 122s, the closer we're getting to this one bigger picture over here, 127 to 130 is where I think we're ultimately headed. So this could ping pong and continue the grunt and grind for another several months. Could even take several more years. Remember when the euro bottomed down here 4 years ago? I made a bold statement, everything but a prediction. I'll leave that to the prophets. But I said this would be a great time to go long the euro dollar because we're expecting this to last for multiple years and go thousands of pips. And at that recent high up here at 121, that was thousands of pip move, yes, but I don't think it's finished. Based on the dollar, it doesn't look finished. Based on our rules of highs to lows, took the 618, likely going here, took out the 786 over here, says we're going here, reconfirms it. So up and until price has finally decided what it's going to do, this is where we're headed, right? Still got the higher price. I like 75% chance we're going to 127.40 area, and I like the 70% chance we're going to this 130 plus area. This is kind of where we're thinking we're headed. Well, what is this big green box down here? We have to break and close below that to then shoot the target to going lower low toward our target down here. Then we are going to these targets to the upside. So at the moment, we have a 75% chance we're going to these targets up here and only a 25% chance we're going down here now. Although it's 100%, in my humble opinion, we're going to eventually get down here. But I still think we got to go higher high first, right? So far, so good. So up and until we get below this, it's over and we're going down here. But that's a long way to get down to. And we got to close below this, not just test it to bounce off of it like we did over here. This original low up to the high got a beautiful 618 bounce before we went breaking out. Now we're doing the same thing again. We got a little pullback. I still think we got to go higher because of this move. High, low, 618, 786. Targets have been reconfirmed. This is where we're headed. So it's going to take some time. Could be weeks, could be months. Might drag on into 2027 before we get up here. Anything's possible, but this is still a viable target until it's not. When is this not viable? When we break below this green box. Inverse that back with the dollar index. What's the viable target? Down here is the viable target because the same rule. We broke that level. This is the viable target. When is this not viable anymore? When we get above this pink box up here, then it sets the tone. We got 75% chance we're going higher high. Got it? All right. What about the pound dollar? Same thing. Still think we're going higher high before we're done, and then we go lower low. But we're ditto, right? From the recent high to low, stuck between the resistance, and from the recent low to high, stuck between support, and we're just kind of chopping. Well, why do I think we're more likely going to go breaking out more than we're going to go breaking down right now? Even though long term, we're breaking down to lower low and then some. So I got to go out to the monthly chart, or at least the weekly, but I'll use the monthly and zoom it in. But the same rule. I got the pound from the same recent high over here in May of 21 down to 22 low. We took the 618 out over here with that little candle body, big rejection wick, but the body still closed well above. So that said a long time ago, we should go visit 149, 148, basically 147.90, 152 area. So this is a much higher probability target right now than lower low at the moment. And then later, as we chopped in here, hit the 786, got another retracement, closed above the 786, big candle bodies. That's on a monthly chart. That's it. Reconfirm we're going up here to 147.90, 152.80, right? Still could take months to get up there. Still could go into next year. Could still, I remember what I said back here during that period. I said it would be a great opportunity when the euro pushed lower, the dollar did its thing, topped in reversal. And I said the pound overreaction, I was expecting it to kind of reverse in like the teens, 1.14, 113, something like that. Well, we got an overkill down to 103. And I made that same bold statement, said this is a great time to go long the pound dollar. It's going to go up thousands of pips in a correction before then we go even lower low. So this is still the plan, the correction to finish, then we go lower low. When the dollar reaches 130, 140, this pound dollar is going to be below parity. Got it? So there you have it. So in the interim, what are we doing? I don't think this is finished. This is still a higher probability target longer term. Shorter term, we're stuck between support and resistance. So you see these charts gets messy. That's why I like putting on a charting platform. And then my trading platforms, whether I'm trading in MetaTrader, NinjaTrader, whatever we're trading in, got NinjaTrader over here, got MetaTrader that I use the software in. I could use either one, but this sets up with the software beautifully. I still think we're going higher high. The weekly's got a hook cross deep slope angle separation. And my daily was retracing over. And I told you last week we were expecting more than likely this would turn over to slingshot higher in the direction of the weekly, which fits the high-low scenario. So we got a fresh one here. We got to get above the 618786 to say we're going higher high there. And then on that bigger scale I showed you, we go to a higher time frame, getting in the low, and we're talking about from that recent high to low, we took the 618786, so that's when you run your Fibo and get your extensions to go up to that 147, 152 up there, and we're already at those levels. So everything about this says we're more likely going higher than lower, even though long term we're going lower low, right? So this is corrective to a lower high, then lower low. So even go out to a monthly chart and we can see what that looks like. from all-time highs over here, this was only supposed to be a correction before a continuation. This thing's been in a downtrend for decades, right? And this is no exception, even though this is likely going to go higher before we're done, hit that 147, 150 area, then reverse to a lower low. That's the longer term plan. Shorter term plan is we need to go higher, right? That's the shorter term plan. So you're looking at this, my monthly's turning over, yes, and we kind of engaged, disengaged here. We did make that lower low we're expecting. So what am I expecting this to do? Engage back up. So what does that mean on the software? The red's going to hook back up, blue and green going to hook back up. This is going to drift higher, and we're going to see what we call this slingshot palooza to have this eventually go reach the levels, then do what? Then the monthly is going to cycle down like it did over here to make that lower low there. We're going to get another one like we did here off all-time highs. We're going to get one of those. But I don't think this is the beginning of that. I think this is going to slingshot up. We're going to go higher high first, reach those targets. Then we're going to turn over. So if I could draw this, then we'll turn over. And as we start coming down, would not be surprised to see not only a monthly cycle down, but even a monthly slingshot lower and lower and lower as we go back towards 103 down into below parity. Okay? All right. So that's how we use the software says we're likely going higher high, even though it says, well, what do you mean? Well, the monthly is aiming down at the moment. My weekly is aiming up. And the corrective structure says this is not finished. We still need probably one more pop up there. Then we can start reversing. All right. So back to this. We're stuck between support and resistance. What would I be in a position of authority when we said buy this? Be in position of authority. Still holding out. Yes, I still think we're going to break this pink box more than we're going to break the green box. But hey, force price to prove itself. What if we break this light green box? We're going lower low. Right? We're shooting for this. What if we break the pink box? We're going higher high. We're shooting for that 139, 140. But I thought you said 147, 150. Yes, that's the bigger picture, but short-term goals, short-term targets. Amen? So force price. I could easily go long when we break above this pink box to shoot for several hundred pips, or I could go short to shoot for a few hundred pips to the downside, force it to do one or the other. Close above this, we go higher. Close below that, we go lower. Pretty simple. What the bias, we're likely going this direction because of the bigger degree bias. Amen? All right, let's continue. Euro pound, dollar yen, euro yen, etc. This euro yen, be careful. We talked about this the other day, even though it did make a new higher high, still loading up for more downside. Still think there's a chance we're going to start breaking down. We're basically looking at this initial correction, and this grinding overlapping doesn't look proper for, well, that's the correction. We've been in an uptrend, right? Pretty simple, Gary. We've been in an uptrend, and this little correction is it. And now we're going blasting off for more of the same. Well, typically, when you bottom after a correction, you don't overlap like this. Up, down, overlap, up, down, overlap, up, down, overlap. Then this, right? This kind of was up, down, higher high, higher low. We didn't really overlap. We just started stair-stepping higher and higher and higher. So this tells me more than likely we still need to flush down. Then when you look at the software that's setting up, euro yen, pound yen, etc., you got monthlies overbought, weeklies overbought, dailies overbought. So I typically don't look at this when I see a monthly and look to go long, right? Got your monthly extremely overbought. You got your weekly back in overbought territory. We got divergence setting in right now on this weekly. What does that mean? We got a higher high in price, but the indicator showing a lower high in price, and we're starting to show this hooking down. That's conducive to a push lower. Fair enough? That's conducive to a push lower. So all you got to do is click this and say click to sell, and we're good to go. And now I need to stretch this out because I'm on a monthly chart, weekly chart. I'll move that up, move my targets down. I should have checked that before I entered, but I'm looking for some moves down in the weeks and months to come, this thing to start correcting. If this is the initial correction, we still need a lower low over here, which would put us around that daily magic fibbo. And it's on-screen programming, but this engage, disengage says where we move lower to engage up, that's this initial move down there to where we start engaging up. As this disengages and pushes lower, we're going to go lower low, get sucked and pulled into the Ichimoku cloud right there. So what's my initial target to the downside? Go to the daily chart, my magic fibbo. And I kind of almost had it exactly where I want it to be. I'll move it just a touch more right in that zone of where that magic fibbo is sitting. So that would be my initial one. We should go lower low than this, which is starting to break below that. So I can move these. And again, on-screen programming, so I can move them where I need them to be. And we start getting to take profit. It'll move the stop loss into profit. So it makes it a absolute winning trade. It hits take profit 1, moves the stop loss automatically for you into profit. So what's this likely going to do? I'm looking just like the weeklies engaging and disengaging down. I'm looking for the daily to do the same. So this move, initial move, rally to a lower high, lower low, and we start looking for this to push toward that daily magic fibbo. Back toward these lows. Got it? All right. So I'm just going to let this baby run over the weeks and months to come, and we'll see how that plays out. Pound yen, kind of the same. We got the same scenario here. We got a monthly in overbought territory. We have a weekly in overbought territory. It too is showing similar signs of divergence, where we have that lower high on the indicator, higher high on price. So it's kind of setting up the ditto. This likely will start pushing down in the weeks, not days, seconds, hours, but literally weeks to come. We're likely going lower low than that. Push down toward the magic fibbo. This is on that daily chart. Likely coming down to revisit that daily fibbo. And even this bigger picture we're going to show you in a moment. What do we do after this impulsive move down? Chop, overlap, chop, overlap. And even though we went higher high, still kind of sets the tone. We need to even go lower low than that, which sets up thousands of pips potential. So in the short term, we got this overlap looking like we need a lower low here. And on this bigger picture, this overlap looks like we got a bigger ABC. So I'll come over here to the charting platform and show you what that looks like. But you can see why we're beginning to believe this is more likely going to fizzle and start going lower in the days, weeks, and months to come. Come back over here. That's the euro yen. Let's go to the pound yen. Same thing. This initial move down, this overlapping corrective action, even though we did make a slight higher high, it looks like we need to go lower low than what? This initial move down. Amen? So this looks like a little 1, 2, 3, 4, 5 wave. And where's my 3-wave correction? Kind of chopping and grinding A, B, C. And this looks like we got to come back down. A. So this is on the smaller scale. A. All this chop overlap move, even though we call that an expanded flat because it did make a new higher high, that's the B, make that look like a B. And then we got the C likely coming back toward this low to make a new low, which puts us around the magic Fibbo. So far, so good. Now, if you look at the bigger picture, when we hit the carry trade unwind back in July of 24, down into August, that was very impulsive after this big climb higher. We go back to COVID. I made a bold statement back then that the pound yen would go up 8 to 10,000 pips over the next multiple years. And I'll show you that in a moment. But we hit that exactly where we expected, got that scenario. Now look at that price action, impulsive down, just like the little one. And we got all this chop and overlap. And we did go higher high. So this is looking similar in the same breath that this looks like the much bigger degree of an A. All that expanded flat on the bigger scale is the B. And we still need to come back down to the low around that 185, 180 for a C, which is thousands of pips lower. So we have the potential of making hundreds of pips on the smaller one to potentially thousands of pips on the bigger one if these price patterns play out. And the software is in agreement with the monthly, weekly, and daily being overbought, not for this to continue higher, but to start pushing lower. So what's the plan? I get into a position of authority. What happens? Once you're in a position of authority, I'm in a win-win trade and can't lose. And if it turns and pips me out, I get back in. I just don't make a habit when the monthlies, weeklies, and dailies are extremely overbought to go long, or when they're extremely oversold to go short. I reverse, use the pattern. And with this price action, ditto on the bigger scale and the smaller scale, looking like we certainly need a correction down on the smaller scale. And on this bigger scale, we need a much bigger correction down. So those two are leading to the same conclusion that the software is coming up with: monthly overbought, weekly overbought, daily overbought. How's that? All righty. So you come back over here with the potential same thing. And what do we do here? Well, we have templates for your ease and convenience. And we can use the magic Fibbo. We come in here and put a template on there. And what do we want to do? I want to go over here to my expert advisor, properties, because this pound yen is a volatile beast. So I want to give it some room to breathe. I like putting big numbers initially, so then I can change it, put the orange screen programming, and we'll do 1,000. And we can even make that much bigger if we do in the shorter term or the longer term. Make that 2,000. Just click on it, type in your numbers. So that's just to give me a little something, something. And then all we want to do here in this case, I'm just going to go ahead and press short, but I would normally say trigger short. Right there, use trade trigger long. No, I don't want to do that. I want to trade trigger short. Yep. Do I want a slingshot long? No. Do I want a slingshot short? No. What does all this mean? I want to go short. Monthly signing up, we got the divergence on the chart. We got the time frames overbought. So we click ready to trade, click to sell, and it instantly pops it in for you. So what's my initial target? I just threw some numbers out here, but you come back to the daily chart and we can see we want that daily somewhere between this initial move down, this chop overlap. We want that daily somewhere near that magic Fibbo. And based on the smaller scale, A, chopping, overlapping, B going down, and C, we want to see this come at a lower low. And if it starts playing out to where we get that bigger degree we showed you on that higher time frame, where we had this initial move, maybe we put this take profit 3 way down here and say, we need to get this, and you click on it till you see these little lines. It's sometimes hard to do with that noise. And then you can move it. So we should come somewhere down near this prior low over here, longer term, which would be thousands of pips away. So there you have it. I'm going to let this baby run for days, weeks, months, whatever it takes. Once I get to a position of authority, my stop loss will move into profit, and then it turns an at-risk trade into a no-risk trade. And we could even take a profit along the way, but I still think we're coming down near the lower low for the first profit, which is a magic fibbo on the daily chart. Then we should go lower low. We can move this on-screen programming. So what does that mean? I can move it wherever I think it's going to go to take my take profit to, or I can just click the tab when it's up one day. So I think that's plenty, even though it's not exactly where I thought it was going to be. I click the tab. Got it? All righty. There you have it. So I'm going to let this baby play out and run. Let's continue. Enough of that. Let's move on to the markets. What about the ES? What about the NASDAQ? What about AI? We're going to the moon, Alice. We're never going to stop going higher. Well, there's cracks in the AI foundation. OpenAI missed their earnings and expected to have like 1 billion users. They only have 800 million. That's still a lot, but they missed out. They got 1.5 trillion that the CFO or CEO, whatever that woman's name is, said that she doesn't know if we're going to be able to pay the bills that we told everyone we were going to pay 1.5 trillion. That could open up some major downside on NVIDIA, some of the big tech, Google, because they're saying it's because of Google Gemini that they're losing some of their users and this, that, and the other. So maybe Google's going to go higher. It's underperforming, and maybe NVIDIA takes a big bloodbath coming. Be careful, but there's cracks in the AI armor. And if that happens, we're going to get a big correction. I'm not trying to tell you it's happening today. I mean, the markets could slough this stuff off, but eventually the cracks in the foundation are showing up. Look out. We need a correction. We've had this unbelievable run. And even though we did get a little bit of a pullback, that's not enough of this surge up. We went to the extension, so I'm looking for a much bigger pullback. We really need at least to go back and test 7,000. That's where we broke out from to potentially go higher. Or we can get a 618 type of retracement from this low up to that high. We can get that 618 retracement, which is this green box, already on the chart for you, but I'll show you what it is when I put my chart lines on there. But the magic fibbo, so if we don't hold this back test of the breakout, we start closing below that, then it's logical we're going to make a move down here toward the magic fibbo. We don't hold the green box, then we can even go lower low. And if you recall from our much larger conversation that we talked about this move from this low, and we grind it up here, and all this chopping overlapping, I kept saying months ago during that period, we needed a lower low to clean this up before we could go higher high. Boy, did we ever get it. And this gargantuan move, biggest since we've seen in 1950, long before I was even born, that is now exhausted. The software is overbought, exhausted move. Doesn't mean the market still can't go higher, but it means it's exhausted. We need a pullback. So I look to come back towards 7,000. If that doesn't hold, we probably retrace back toward that 67-ish hundred, test that 67, 65-ish zone. If that doesn't hold, we're going lower low. Well, if you'll recall what we were discussing, that I thought we'd have a grunt and grind rally April, May, maybe into June, then have a big fall decline, big retracement into the fall, and then we would go blasting off to far-reaching higher highs. Well, I really wasn't expecting to make a higher high here. I thought this would take longer to do and bog down at a slight lower high, then get the fall retracement, then Santa Claus rally in the next year. We were going to get the run up here into the stratosphere. Well, it didn't quite play out like we expected. It went higher than we expected. This was a definite. I said, this is a good time to buy the dip. We were going to go up and rally, and then we look to take profits and then look for the correction and rinse and repeat. Well, we went further and faster than I expected. Well, I would expect we're either going to kind of chop and grind in here. for whatever reason, I have a kind of feeling in the pit of my stomach, we're still going to get that fall correction into the fall. Is that the open AI stuff saying, well, you're right, we promised all these people we're going to buy the chips, we're doing this, the data centers, all this, and it was all gung-ho, but we don't have the money to pay it. It's kind of a house of cards. This could force the NASDAQ, Russell, et cetera, most of them, certainly NASDAQ and ES, to have that bigger correction, just on rumor of it. I digress, but be careful up here. I've been saying for the last several days, even though I did grind a little higher, that we had this big move, biggest since 1950, and we're desperate for a correction. So in my humble opinion, I'm looking for this to kind of dribble and go lower toward 7,000. Could we hit that and go even higher high? Sure, that's possible. Or if we don't hold that, then we're likely come and retest the magic Fibbo / 618786 zone. So what is that? You use your 2.2 Fibbo retracement. You go from the low up to the most recent high, and you see where that 618786 zone is located right here. Right there. That's it. So that's why that green box is there. So if we don't hold the prior breakout and we close below that, the likelihood we're going to get sucked and pulled down toward the magic Fibbo / the 618786 retracement zone is very high. Any questions? So in closing, I would not be initiating longs right now. After that run, we need a correction. And I'm not just saying that today. I believe I have it on here. Let's see, maybe not. Let me update this. But here you can see last week even. Let me update these class schedule. But up here I said expect markets to retrace after big run. And we just kept been chopping and grinding. We did pull back. We popped a little bit and we're chopping. But this is part of that retrace after the big run. And that goes in from last week. And then the dollar index, expect to move up to the D1 magic Fibbo, then reverse. Pretty much has done that. I said I still expect gold to break down below 4,100, 4,000. We're going to go over that in a moment. Still looking for the pound and euro yen to reverse and move lower. I just showed you those. So we've been discussing this. It takes time when you got a monthly, weekly, and daily. This thing could take years to play out. With a monthly cycle, it takes months for a weekly cycle. It takes weeks for a daily cycle, etc. But that's good news. We know how long it roughly takes. So I can use options on a lot of these trades and say, well, if I got a daily cycle coming down, then I know I'm going to trade that for at least 2 to 5 weeks. If I got a weekly cycle coming down or going up, I'm going to trade it for at least 2 to 5 months, etc., etc. So there you have it. This is still expected. That's expected. And we'll go over that in a moment. And then the markets, what I term the markets, NASDAQ, S&P, Russell, etc., Dow, after that big run up, expect to retrace. So that's what we're in the midst of. I didn't mean to close that. I meant to come back over here to ES. So I would not be shocked for at least a test of this prior 7,000 range where we broke out from. We start closing below that. It opens the door for a few hundred more points, headed down in that 67, 68 zone where the magic Fibbo resides, and testing this 66, even down to 65. But I was still looking for this to grind up into May, June, then get a fall pullback, then go breaking even higher high into end of the year next year. Got it? That's still on the target, even though we went up and made a new high first. So short term, look for a correction, at least to come back and retest the prior breakout zone. If we can't hold that to bounce and go higher, and we start breaking below that, then look for a visit of the magic Fibbo, which is going to be hovering around the upper 67, 6,800 zone, right? We don't hold that. We can't hold the support box. We're going lower low. And in the fall pullback, I was likely looking for a weekly type pullback toward the magic Fibbo. That would even push us lower, potentially toward that 6,000. Right now it's 57.58 is the magic Fibbo, but that's what we're looking for, a much bigger decline into the fall, then blast off to new all-time highs when we get to end of the year Santa Claus rally into next year. Fair enough? Well, what I do like potentially, if you look at the prior low over here, which was Liberation Day low, up to the current high, we get a 618 retracement, which is right at my magic Fibbo on a weekly chart. We call that a combination. This is a 618 retracement is part of the equation. But if that equation lines up perfectly with a magic Fibbo at that same level, then that's like the combo meal. And if that does play out this way, where we do retrace down in here into the fall, and we're able to find that support around that 57, 58-ish level, which is right where my magic Fibbo and my 618 are lying, if it reverses from there and breaks out, then it has the potential not only to go to 8,000s, but potentially to push toward that 1618 up here toward the 9,000s. Wow, that'd be quite a move, right? Come down here to the upper 5 to 6,000 low and go all the way to the nines. That's massive. So this is my aggressive target, which is kind of the blow off bubble version of that top, or we get the much lower degree where we almost reached the beginning of that bubble. But I said that so many months ago, we were headed here. And sure enough, we grinded our way and we're making it. What's next? I do think we can get a fall pullback and even a bigger one. And if it turns out we're successful in the fall pullback and we do come back toward this weekly magic Fibbo to bounce, and we get that magical 618 retracement combined with the weekly magic Fibbo, then the door's ajar to go into the 8,000s, but could push toward even 9,000 plus. See it? That 1618 up in there. So this is where I think if we can get this magic Fibbo bounce off of here, this is extremely high probability target. If we don't retrace that far, and we only come maybe to the 618 retracement out of this, then this is more logical target. I don't think retracing to this area is going to have enough strength to get up here. We need the bigger retracement to charge the batteries to then give the much bigger push higher. So in closing, short term, look out below. We need at least a correction of a few hundred points, 157 or so, to come test this, 100 plus points anyway, come test the 7,000 area breakout. We don't hold that, then we got a couple of hundred more points looking to come down toward that magic Fibbo 618786. So I'm going to stretch my box a little bit more to bring in the magic Fibbo with it. So what are we saying? Mr. Tucson, the likelihood we start correcting down to there is very high. We don't hold that, very high to start moving toward the magic Fibbo. If we start closing below this box, then we're definitely going lower low. But I don't think we're ready for this yet. I'm looking for this to go into the fall. So we still have May, June. Maybe we retrace up here, go a little higher in May, June. Then July, August, September, October, we take the plunge into the fall. Then we reverse even higher. So just like we talked about, an important area to buy here for a bounce, we get that much bigger correction and we come back to this weekly chart in the fall time frame. That would be ideal. See us somewhere in this zone in the fall, and that would be what? Somewhere around that September, October range. And we see us down here. This would be a great buy, year-end buy bounce, going to not only this conservative target, but likely if we get the perfect 618 magic weekly Fibbo bounce combo meal, stratospheric in the mid 8s or even 9,000s. Wow, that's impressive. All right, so far so good. This bounce was expected. It was a little more oomph than expected. I really was looking for a lower high, lower low into the fall, but higher high is okay. We could still go lower low into the fall and still get the bigger bounce. NASDAQ, it too reached the extensions. We got the bounce. I was really looking for a lower high, lower low. I knew we'd rally strongly into this April, May, and I wanted it to go even longer into June, then July, August, September, October, bigger decline to the magic Fibbo combo bounce and set up stratospheric type of moves. We already started to reach my initial target, which, what did we go to? Just like the ES and the NASDAQ, we went right to the extensions. So what is this telling me? We're overbought. That's been a hell of a run. Yes, it could continue, but the logic is we need a retracement to come back toward this 26.3, about 700 points or so, start moving down that direction. We don't hold that, then the door's ajar to come back toward the magic Fibbo, and from the recent low to high, let me fix that for you, get the most recent high out of this. We come up to that high, this low, to that high. We got our 618, which is setting up right around that magic Fibbo area. So I need to adjust this slightly. There's my 618, 786, and I'll incorporate it a little bit bigger for that. See that low, high, 618, right at the magic Fibbo, 786. So I'll bring this up a little bit. But if we don't hold where we broke out from, then we're likely going to get sucked down into where the magic Fibbo resides, aka a 618 type of retracement from that low to that high, 618 retracement. And could this happen sooner, right? We're only still in the end of April. This thing could pull back in the first couple of weeks of May, go bouncing up into May, June toward July, go new higher high one more time, then go August, September, October, etc. Fall decline, then we go blasting off year end. So this is not doom and gloom, not if we don't hold the prior breakout. We should likely come here, but we don't have to break the support zone to go lower low that fast. Because I wasn't looking for this to get a lower low by May, June. I was looking for it to top out May, June, then get lower low in the fall, then go blasting off into the stratosphere. So far, so good. So in closing on ES and NASDAQ, probability we pull back at least toward, and for the NASDAQ, this 26.3 area where we broke out from, extremely high probability. If that doesn't hold, expect more downside to go testing the magic Fibbo, which again, you would run the low up to the high, get your 618 retracement, and they're both lingering in the same area, 618 magic Fibbo area. So this would be a logical target. We can't handle what we broke out from. We don't hold it. We're going down and test the magic Fibbo. All right. Then we could still bounce because it so rapidly did this in April. This should have been April, May, June kind of run, but it's an April run. How about that? So this could go May, June, then still go July, August, September, October, etc., down in here for the bigger pullback. So be careful. Short term, look for at least a pullback toward 26.3. If that doesn't hold, so it's considerably lower from 26.3 area down toward this 25 area. So another 1,000, 1,300 points. That's a lot of points for that move, but that's what's in the cards if we can't hold this breakout of this 26.350 area. Amen? All righty. What about the Russell? Russell's the only one that's a little bit different. We already got the bigger pullback. We're already breaking out. I still think the Russell's headed to 3,000, 3,100. Could it be that we already see the NASDAQ and others and we just keep grinding a little bit higher into May, June, then July, August, September, October, and then we go even higher into the end of the year, Santa Claus rally, and we have this much bigger blow off top. Yeah, that's possible. It could set up the same type of tone that we get the retracement. We don't hold support to go higher now. We get a deeper retracement, and maybe we do this. Maybe we, grind up here in May, June, and toward July. Then July, August, September, going in October, we do a Fibonacci retracement, 618. All these are kind of setting up the same from the liberation low up to the highs. We're going to adjust that to this retracement. We could even blast off into the 34, 35, maybe even 3,800. That's huge if that happened. But in the short term, I do think this 3,000, 3,100 is a foregone conclusion. Pay me now, pay me later. The Russell will be up here. The question is, do we correct first to get there? Or do we reach this first, then correct to even go higher? All I know is this is what we call salivate country. From the liberation low up to the high, we get a 618 type of Fibo combo bounce. Then it sets up the stratospheric type of move. Otherwise, this 3,000, 3,100 is a conservative target, but it's a foregone conclusion. I don't care if this baby plummets now, we're still at least getting there. But if we can eventually go here first, then get that bigger pullback into the fall, then it sets up even the more stratospheric type of move. Fair enough? Well, what does the Nikkei say? Nikkei's struggling at this lower high, like the Dow, right? Dow and the Nikkei kind of look the same right now. They're struggling at lower highs. I do think we're going to get higher highs. We're going to go bubble hunting. But why do I even look at the Nikkei, you ask? It's because of, right here, Nikkei, it's because of global liquidity. It's like a proxy for global liquidity. And this recent run up has been insane. And this correction looks pretty impulsive. So this really looks like, when you do my ABC, it looks like a 1, 2, 3, 4, 5. So this should be an A. This is my B correction. And we come down in C to set up the bigger run into the end of the year next year, right? All I can say is it's not a guarantee, but just from price action, right? These two lows over here, I know I'm on a weekly chart, so I don't have to zoom out that far. But this was the carry trade unwind. Then we got this grind. Then we did the liberation day low. When the markets like Nikkei start shrinking and pulling back, it pulls our markets back as well, right? So if this is the A, the B, and we get a C in here, then there's no way I see ES going ripping higher, NASDAQ going ripping higher, Dow, any of our markets going ripping higher when the Nikkei goes plummeting down thousands of points. And that's what's set up on this chart. Fall decline into this, and maybe this too sets up like everybody else. The liberation day low up to the high, we get a 618 type of retracement out of this thing where the magic Fibo is right in the neighborhood. So could we get this fall decline, 618 magic Fibo combo bounce to set up what? You do a 3-point tool. So let me take some of these off of here for a second. And I'm going to do these real quick for you, what that looks like. I'll just take them all off, start with a fresh little chart here. So we have a 3-point tool. We got this high, well, that low to this high, and we get a 618 type of retracement, which is setting up around the magic Fibo, right? We can grind a little higher, and then the fall decline. We come down in the zone, but look where that puts us. At least a trip for equality. If this is an A, B, C type of correction, we'd expect at least to go to 74.2 for equality. But if it turns out it is the 618 combo bounce and a magic Fibo at the same point, we call that the combo, Then it pushes this potential to 94,000. Wow. Isn't that impressive? So be careful. This looks like at a lower high, we need a lower low out of this. And if that lower low into the fall ends up bringing us toward that magic fibbo, which again, from the low to the high lines up with that 618 zone, which is in the neighborhood, right? That low up to that high. Look where that 618 is, right where we are. Can't make this stuff up. So, Mr. Tucson, could this thing grind a little bit more and then go into the fall and then still do this? You betcha. All I know is if this does what we think it's going to do, A, B, C, then go popping, then when this starts pulling down, it's going to pull ES, NASDAQ, Dow, etc. with it. All right? All righty. So in the short term, this bounce was expected to go right where we did go, but not this fast. I was thinking this would kind of grunt and grind April, May, June. And then as we start going July, August, September, October, get the bigger fall retracement. Then end of the year Santa Claus rally, into next year, get the blow off top. Amen? All righty. So be careful with this. This is setting up for a lower low. And I can assure you, I do not see any way that Nikkei goes lower low and ES continues to go higher. NASDAQ continues to go higher. Dow continues to go higher. I see them all plummeting down with it, like it did here for the Liberation Day and like it did for the carry trade unwind. Amen? All righty. There you have it. So any questions on the markets right now? Higher probability, short term, go back to the daily. We're overdue after the massive run. We need a correction. Least to where we broke out from, that doesn't hold, and back toward the magic fibbo, 618 retracement zone. That doesn't hold, we go lower low. But because this happened so quick, so fast, we could even get some sort of retracement like this, go blasting off into May, June, pushing toward July, get one more little blow off top up here, then get the fall retracement and still get next year's bigger blow off top. All I can say, whether it happens by the fall down here or sooner or later, we get a perfect 618 magic fibbo combo bounce. It sets up a stratospheric type of extension up into the upper eights, even 9,000 range. How cool would that be? All righty. Same thing with NASDAQ. It too has been on a beautiful run as of late. It's exhausted. The software is overbought. It's exhausted. It needs a pullback, right? Come over here. I believe we have that over here somewhere. Let me see if I can find it. So again, I'm going to let these babies run for weeks, months. And when we get to a position of authority, then we just let it do its thing without even worrying about it. Let's see. There's the Russell. There's tech. Here we go. NASDAQ. Setting up. Look at that. Beautiful. Got the daily trigger. Got the PAI hook and crossing. We got a weekly overbought. Needs a little depressurization after getting to extreme. We got a monthly that's been a slingshot palooza, and it's starting to depressurize. This is setting up for, as we go into the fall, is what I would look for as far as the software is concerned. Start get a monthly, start cycling to depressurize into the fall, then give us another big kind of slingshot like that to give us that stratospheric type of move into the fall slash bottom down in here, then go ripping higher into next year, end of the year Santa Claus rally. But I'm looking for another big slingshot on this monthly. I just think it's going to go lower and start to create a little bit bigger type of slingshot than the one we're in now. And I think as we get into the fall, or maybe we slingshot up into April, May, and we go in May, June, then we do another pushover, depressurization into that big slingshot. So, Emil, all I could say is, my friends, when we get down into the fall and I see the NASDAQ pulling back toward that weekly magic Fibbo, which again, the weekly one's sitting right here, right there. So if we can get this short-term pullback, maybe we pop one more time in the May, June, pushing toward July. Then we get the July, August, September, October pullback toward this magic Fibbo. Then we go, what? This will start cycling down into July-ish, April, May, July, August, September, October, start flipping over on that weekly. And then what? I'd love to see the weekly bottoming and reversing when we get to that low, just like we did this last time. Same type of thing. I want to see the weekly return back to oversold as we go into the fall. And this could grind a little higher, right? The daily turns over, slingshot, this pushes a little bit more. We just kind of dip lower, go higher into May, June, then July, August, September, October, we get a weekly cycle down. What does a weekly cycle down take? About 2 to 5 months. So if we push the clock and we end May, June, July, August, September, October, we could take 5 months from there, or we could go 2 months and we're in July, we go August, September, October type of thing. But this is what I'm looking for. Ideally, Harold, get this weekly oversold by the fall, back in oversold territory. Then we'll salivate to buy that run back up into the stratosphere going into the end of the year next year. In the short term, because we're overbought, because we're exhausted, after that big run on this daily chart, we need a pullback. Everybody good? We need a pullback, and it's starting to show us what the software is telling us. We're going to pull back lower. See it? So what does that mean? Expect ES, the NASDAQ, etc., to at least pull back to the breakout zone, which for NASDAQ is 26.3. For ES, it's around that 7,000 and change. So look for this to go lower the next few days. All right. And if we don't hold the breakout, then we go even deeper. And again, we have plenty of time not only to pull back here, fail, come back here, getting into May. Then we could go bouncing May into June, pushing toward July, get a little bit higher high, then still get the big decline into the fall. Amen? So don't let this fool you. Definitely think we're going lower. Doesn't mean we're getting the fall pullback now. It's possible, but we could still get some sort of pullback and another rally into the summer. Then we get the July, August, September, October fall decline. For whatever reason, I have a feeling in the pit of my stomach we're going to get that fall decline. And ideally, I'd love that fall decline to decline right to my magic Fibbo 618 off of the Liberation Day low. Perfect 618 magic Fibbo weekly bounce to set up stratospheric targets into next year. We'll see how that plays out. Amen. And certainly with the Nikkei, this looks like an A, B, C. So does this mean this has to drop today going straight down the next several weeks? No, I'm looking for this thing to play out in that A, B, C. In the C, we should be somewhere near that weekly magic Fibbo, or at least lower low than the previous low into the fall. And then we'll look for Santa Claus rally into the next year, big run. But ideally, it would be fantastic if we can get this baby to line up with all of the markets where we get Liberation Day lows to current highs. We get the low, and it happens to be a 618 retracement combo meal. That sets up the stratospheric targets. So what is that on this chart? That could be upwards of 90,000. upper 70s, low 80s to 90s. Wow. And then ES sets up mid 8s to even 9,000-ish. Is that? And then NASDAQ from Nikkei to this, if we get the magic Fibbo bounce on the weekly, that sets up the mid 30s, if not pushing 36,000. That's huge, right? That is huge, my friends. Short term, we're going down. Down goes Freesia. Why short term? Because we had a big run up. We're exhausted, and the daily needs to depressurize. So, what are we looking for? This to continue over the next few days, to at least test the 26.3. We don't hold that. We break down toward the magic Fibbo. And because this whole thing happened in April, it gives us plenty of time now that we're going into May, retracement, June, July, pushing toward, June in toward July, maybe even get another little blow off top, then the fall decline, and then the next year rally. So we'll see how this plays out. So far, so good. You remember when this happened and we got that lower high? For months, I said, be careful. Any rally should be sold because we need a lower low to play out before we can go higher high. I just didn't expect this higher high to come in so fast. I expected this was going to rally even to a lower high, lower low fall, and then get it. Well, we got it. And this was clearly defined that we were expecting this to rally into April, May, etc. We got it. Now we need a correction. And because it happened so quickly and so fast, look for a correction. It still gives us time to pull this off. We could pull down in here, bounce to go higher into June, then July, August, September, October, still get the fall decline. Or we could even retrace further, get a magic Fibbo bounce out of this into first weeks or so of May. Then we go May to into June, June into toward July, get one more loud pop, then we still get the fall decline. And right now, not only in the short term do we need a correction, but as we get into summer, pushing toward fall, I'm looking for a bigger decline. All right. All righty. Let's continue. What about Black Gold, Texas Tea, the Beverly Hillbillies? It's all about this crazy war, the Strait of Hormuz. And you listen to these people, they say, well, Iran still controls the Strait of Hormuz. With what? They don't have a military. They don't, well, what's left of them. They don't have a navy. They're all at the bottom of the Strait of Hormuz. They got whalers, Boston whalers with AK-47s, and they supposedly control the Strait of Hormuz. I don't think so. They're going to cave because with their oil capacity at a halt, meaning they can produce oil, but it can't pump anywhere. All the reserve tanks are full and there's no tankers unloading that oil. So all is stopped. They have no money. They have nothing. So they're going to cave. Just a matter of time. So this could easily continue a little bit longer than expected, and we go popping up to 125, 130, 150. Or if we can't break this, this is the critical zone right here, Harold. When we had that initial drop and pop where we stopped right there, right around that 108 level, right in this pink zone, if we can close above that, we're definitely, my humble opinion, going to 125, 130, 150. We stay at a lower high, like we're trying to do now. We stay at a lower high, we need lower low. So back that March 9th and 10th, we had a high, we had a low. We've been stuck, absolutely stuck in between there, right? Everybody see what I'm looking at? That little swing point, we've been stuck below that. And this first drop down, we've been above that. And the last few months, we've just been chopping and grinding in here. This price pattern from this initial move down and this three-wave correction kind of dictates we really need a lower low to clean this price pattern up. Lower low than what? This low right there. So I still think that's a high probability, minus rockets continuing to fly, then we could go blasting off. So just like all the other markets, we're stuck between support, we're stuck in resistance, and where are we going? This price pattern says we need to go lower low, higher probability than we need to go higher high. But we had the same scenario over here. We needed to go lower low to clean it up. But what happened? Rockets went flying. So I won't tell you, yep, bet your life this thing has to go lower low than that low before we can ever go higher. No, we start closing above this pink box. We're definitely going higher, in my humble opinion. So in the short term, I'd be very quick to buy and take profits on anything moving up, right? We moved up, take profits, up $3+ for the day. It was almost 4 when it was up at the peak. So yeah, 4+. I'd take profits on this. This does not have to go breaking out. And right now, we see every time we get this rally, we got to move down, we got a lower high. We move down, we're still at a lower high. That high, low, lower high, lower low, lower high is still more conducive to a lower low, and that sets up that bigger A, that impulsive move, that 2-day period, move down from 119 all the way down about 70 whatever dollars that is on that swing point low. And then what? Looks like a 3-wave correction in that. That looks like the B. And this grind lower is the C. So what do we need? We need a lower low than the prior low. And what is that low? That's this little red candle on March the 10th, March the 10th. And that is at 76.73. We came close to that, and we're still at a higher low. So when you look at this, yep, we're stuck between this zone. And right now we got a lower high and we have a higher low. So this could easily set off that blast off, but it's going to take rockets flying. If they finally give up and they go, you know, we have no money, we can't sell oil, no ships can come in or go out, we're stuck, we're screwed, we're going to open up, we're going to submit, then this thing will go plummeting. That is the more logical direction for this to take place. So any rally should be aggressively taking profits. However, if rockets fly, something else happens, and we get above this pink box, expect we're going to continue to surge toward 125, 130, probably 150. This thing could go really haywire and push into the 200s up here. Sounds insane, but we could push that 250 target. It's not totally out of the question, but it's going to take rockets to get us up there. And would that put a kink in the armor about, well, we're going to be cutting interest rates? Well, if oil prices surge to that degree, they're going to be raising rates, not cutting rates. And we'll go over that. Why? Because we have the FOMC, right? FOMC is this week. Let's come back over here, and I'm nowhere near where we need to be, but this is this week right here, April 28th. So we come back to that, and we look on Wednesday, FOMC statement, FOMC conference. So this is interesting week with all that's going on, throwing in a little FOMC in the mix. Well, what do we look at for FOMC direction? This chart right here. DGS2, which is the 2-year maturity rate, and Fed fund rate is this line right there, this kind of tan color line. And notice where we are. Can they cut rates? Not really. Kind of like the last time we were. Really have no room to cut rates. And this is a weekly, but I'll go back to the daily. There's really no room to cut rates here. If they cut rates tomorrow, then it pushes us below where the Fed rate is. right? So that's going to even move this lower. What's the problem? We cut rates. This is the Fed rate. We cut rates. It's going to push us down toward this green line, and look where the maturity rate. We're already above it now, currently. So the idea they're going to cut rates tomorrow when this is already above is extremely low probability. So I think it's going to be another jawbone. Powell's going to do his jawbone usual and keep rates the same based on this structure. What does this mean, and why do we even look at this? You go back in history, and there's been an accurate foreseer of market financial crisis back in the dot-com bubble burst. This thing went plummeting. The Fed had to cut rates. We rallied. The Fed had to raise rates. So thinking the Fed makes the rate decisions, no, they chase this 2-year maturity rate. When it rips higher, they got to raise rates. When it goes lower, they got to cut rates. And right now, we're above to where they cut. So that's typically not conducive to them continuing to cut lower and lower, because when the Fed rate gets above, in these scenarios, higher than the Fed rate, we typically get a crash, right? So Elizabeth, I'm coming to join you, honey, is in the making. Pay me now, pay me later. Do we get this big run into oil prices surging and continuing, and we get this big inflationary push? All I can say is the same thing. This blue line with the 2-year maturity rate starts ripping higher. You think the Fed's going to keep cutting rates into that environment? We know what they do. You can see the line. Every time it goes ripping, they chase it. When it goes dipping, they cut. Then when it goes ripping like this last scenario, look at the steep slope of that. The Fed raised rates faster in the history, 0.75, 0.75, 0.75. They've never done that in the history. That's because this thing was ripping higher. And then we started declining, so they cut rates. Now we're back above the Fed rate, so the likelihood they cut tomorrow is very unlikely. We'll see how that plays out, but in my humble opinion, they're going to leave it alone, and the markets could sell off with some jawboning. Depends on how he plays it. Well, inflation, oil prices, the status of the war, the tariffs, blah, 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 blah. Continue. Well, the markets need a correction, and all we got to do is get his jawboning and see a continuation sell-off. So that's why I'm bringing this up at this late juncture to tie back into what we just discussed on ES. I do think we're getting a correction towards 7,000. If he comes out tomorrow in jawbones and says, well, with inflation, the war, the this, the tariffs, we don't see raising rates in the foreseeable future, even though his reign's about to be gone here soon, I still think this thing could sell off. And technically, we need a sell off more than we need this thing to go ripping. Amen? All righty. Let's continue. What about gold? There's gold in them there hills. Harold, look at this. Looky. We talked about this in great detail. Same kind of scenario we're doing with black gold, we did with yellow gold. We warned you during the big run up, we were due for a big correction. We got it, rallied to a lower high, got a lower low. But what's wrong with this picture? It's fine. We got the impulsive move down, a nice move up, big move down. But look at the way it looks. This, my friends, looks like a 1, 2, 3. And for the last several weeks, I've been talking about this is likely a wave 4 correction. Right there, wave 4. So that's the 1, that's the 2. This big impulsive move down was the 3. We're in this wave 4, and we said, what about wave 2s and wave 4? They alternate, and typically wave 4s take longer than wave 2s, and typically they go 3 to 5 times longer. That's these little uprights. This is 3 times longer than that initial correction here, and then this one's 5 times. And notice where it looks right now, we peaked out right in between. Looky, looky, Mr. Tucson. We topped out right in the middle. And where are we going? Lower low. I still think that's on the card to complete this 1, 2, 3, 4, 5. And what did we say? As long as price remained below 5,000, which is that wave one down, we were good for the last thrush lower. What do we need? We need a lower low below the swing point. Where's an ideal lower low place? 39, 3,700. So, but all we need is a slight lower low. We could dip into the 4,000s, and that's all we may need. But we're still likely going lower low. That's based on price action. Everybody good so far? So what does this mean? We get down to 39, 3,700. That's buy zone. We go anything lower than that, that's get on your knees and thank you zone. We push even absurdly down to a weekly down in this area where this line's going pointing down to. So we go 3-day, sitting right there. We go weekly, sitting down here. And I'm not trying to tell you we're definitely going down in the 30s. No, I think we get the 39, 37s a buy zone. We get lower than that, thank you zone. You get down to here, you get down on your knees and look up to heaven and go, thank you. Because this is a blessed zone. Anything lower than that, right? So in closing, expect gold to continue to break down. I've been saying it for weeks that expect gold still to go below 41, 4,000 right there last week. And before that, back on the beginning of the month, on the 9th, gold headed to below 4,100. How do you know that so far in advance? Well, that's where God-given talent to read and interpret price comes from. And when you're looking at Mr. Black Gold Texas T, that's what you do. And this latest little 1, 2, 3, 4 correction is playing out exactly like we expected. So look for lower low. Anything lower low is all we need. So maybe we stop at 4,000. But ideally, perfect target would be 39, 37. We go lower than that, that's thank you zone. We go lower than that, that's bless zone. What I personally love to see Mr. Black Gold, Texas T, and the rest of these all do that weekly style Fibbo retracement, setting up where the 618 is. That's a dream. That's like the perfect dream move that we go down to the lower 3,000s, hit the 618 retracement and Magic Fibbo combo bounce to set up what? 7,000 to 10,000. That's the next target. Up here in the stratosphere. I think I have it on my monthly chart. Yeah, there it is. So this is where we're going. Mr. Tucson, we need a lower low. Is it a bad move once we hit below into the 4,000s and nibble a little bit? No. We get down to 3,900, buy some more. 37, buy some more. We get anywhere near this Magic Fibbo on that weekly chart, which is right there around 32-ish, 33. See it? We get anywhere near there, I'd nibble real hard. And what? Hold it for a few more years and look for the 7 to 10,000 on the next leg. Leg 1, correction consolidation. Leg 2, 7 to 10. Everybody good? So again, in closing, I think we got to go lower low. Set an alert at 4,000 or, below this 4,100 right here, 4,092. What was the official low? Was 4,098. So anything below that, you can nibble. 3,900 is more probable for the extension target. That would be add some more. 3,700, add some more. We go toward the 3-day Magic Fibbo, puts us in the 35, 3,600 range. Add more. We go down here, get down on your knees, look up to the heavens and go, thank you, because this is the blessed zone if we can get that far down. Why? We get down in the low 3000s and we have to go to 7 to 10. That's a triple coming back at you. I like it. Amen. So be careful. Any rally should again still be sold in the short term. I do think we're going lower low. I'm salivating to get to a lower low to start nibbling. We go lower than that, nibble some more. We get to the blessed zone. Buy as much as I can. Go to Costco and buy some gold bars and hang on to those until you get to 7 to 10,000 range and then go cash them back in. So no matter how you trade, you want to trade ETFs, that's fine. You want to do like Sprott that actually backs up their ETFs with physical gold, buy the Sprots. If you just want GLD, typical, they don't back up with gold bars, but they still can make money on GLD. Depends how you want to trade it, or physical coins, whatever. I digress, but you get the point. So Emil, everyone, James, Mr. Tucson, Alan, we're going lower low. William Bruce, we're going lower low. Question is, can we get to the bless zone? Can we get to the thank you zone or get to the buy zone? I think we're going to the buy zone. That's what's needed to finish this pattern. And if we get the overkill to the downside, we reach the bless zone, then that much more. Silver, pretty much ditto. Still think we got to go lower low. Ideally, I'd love for it to come down to a weekly magic Fibbo into the, say, lower 40s, mid 40s would be a thank you zone. Plus, we get down here, this is more like the bless zone to get that far. In the 50s, we start looking like thank you. It's a good buy zone. We need a lower low. Lower low than what? That low right there. So that puts us around 60. So we get into the 50s, that's a buy zone. We get to the low 50s, that's a thank you zone. We get down to the low 40s, that's a bless zone. Anything lower than that, back the truck up. This next move up is 150 to 200. So where's this going to go? I'd like to see a weekly magic Fibbo out of this thing. Like all the markets, like to see NASDAQ do it, Russell, all of them do that magic Fibbo on a weekly, the Nikkei, the ES, Dow, all of them. Be great. If we get anywhere near that weekly magic Fibbo on gold and silver, that's blessed zone. Amen? All right. Anything lower than that is you're crazy if you don't buy. Right? That's the key. So look out below. Still think we got to go lower low than what? We start getting into the 50s. That's a buy zone. We get pushed toward the 40s, which again is where my 3-day is sitting, and the 50s to the 40s. That would be certainly a thank you zone. And we push the envelope toward the weekly magic Fibbo. That's the bless zone. All right, there you have it. Let's continue. What about Bitcoin? Bitcoin setting up for the perfect move. I still think this is what we discussed months and months ago. Long before we hit this low, I talked about rallying up in here and then getting the 50 to 30,000 range. How you remember this little nibble zone's been on this chart for a very long time. Even as we were still moving higher, we had this on the zone, looking for that typical type of sell-off into crypto winter. This 20,000 and lower back in 22 was like, that's the time to buy. You're going to hate yourself if you don't buy some Bitcoin at this point, because after the halving, 12 to 18 months later, you're going to wish you did. Perfect rinse and repeat pattern. So we won't spend a lot of time, but this is the perfect halving every 4 years, 12 to 18 month run, halving, 12 to 18 month run, big pullback. And it looks like a flat line over here, but it's still very viable. If you zoom in on that, 12 to 18 month run, crypto winter low, start rallying into the halving, 12 to 18 month run, crypto winter low, start grinding into the halving, 12 to 18 month run, crypto winter low, rinse and repeat, rinse and repeat. So what is the buy zone? 50 to 30,000. Bitcoin today, tomorrow, next week, I think it's going to happen more into the fall. But when we're at 50,000 and lower, start buying. We go to 40, buy more. We get to 30, that's the blessed zone. Get on your knees and say, thank you, please. I appreciate it. That's that 20,000 and lower we just went through in 22. And we're going to do the same in this zone, buy zone. The top is buy and nibble. Anything lower, 40 is thank you, I appreciate it, thank you zone. Let me buy a bunch more. And then down here at 30,000, and it cracking into the 30s, 39,000, 38, 37, 36. Any of the 30s is blessed zone, and start buying and hold till when? 12 to 18 months post halving, which will occur in 2028. And we're going to shoot for fall of 2029. And why do we know? We topped out in 25. We're going to top out in 29. We bottomed in 22. We're going to bottom in 26. You continue to rinse and repeat. We topped out in 17, 21, 25. Even go back 13, 17, 21, 25. Most recent, we're going to do it in 29. And then we bottomed in 14, 18, 22, 26. And when are we going to bottom again? After 29, 2020, right? Every 4 years we top, every 4 years we bottom. So the top occurred in 26. The bottom's going to occur in 26, right? 22, 26. When is it going to bottom again? 30. Everybody good? Well, that's what I already know. We know the pattern. So bottom line, 50,000, start buying. 40,000, buy more. 30,000, get on your knees, look to the heavens and go, thank you. And you're going to sit there and hold it for 3 years until 2029 fall. And then we're going to unload it in the 200,000 plus. And with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. So join us again tomorrow. That's it. That's all.